told you
YouTube
this
live
is the
too.
best way to do it. I told you. Just be
You
live.
did tell me. Are we live?
Yeah.
All right. Hey, people. Welcome to the Visionary Experience today. Check it. We are live, uncut, unabridged, unfettered. You know how we do. Listen, I got to break it down for you. You see this lady right here? She is a super realtor, right? She left a cape over there by the front door when she came in, right? This is Stephanie DeBerry of Steph Sells the DMV with eXp Realty. So listen, we've been doing business together for several years. We've closed lots of deals together, have had lots of happy and satisfied clients. At the end of the day, when you work in real estate, when you work in mortgages, to me and to Stephanie, what it's all about is making sure that we provide the best service, the best deal, and the best experience for our clients. It's all about them at the end of the day. So I am definitely happy. It's a great pleasure to have Stephanie here with us today.
Thank
How
you.
are you?
I'm good, Brandon. Thank you for having me.
That's right. And see, look, that was unpracticed. Did it in one shot, just like your man Jay-Z in the studio, apparently, right? One shot made it happen. So look, we're going to dive right in. That's what we typically do here, right, on the Visionary Experience.
Okay.
So 2021 year to date, okay? What has your experience been in terms of looking at the real estate market, the fact that it's a seller's market, different buyers experiences? What's it been like so far for you and from what you've noticed, especially here in the DMV market?
What I've noticed is what so many people across the country, and in particular, you said the DMV, have noticed. The market is off the chain. We're being a little casual, but we are very professional.
Yes.
It's frenzied, I just like to say, for buyers. For me personally, though, I am calm, cool, and collected because I know that I'm a professional representing my clients. In this case, most are buyers right now that are a little anxious, little fearful. They don't know the process.
Right.
And so it's up to me as a professional to maintain all of our sanity throughout the deal. I will say our buyers, you just have to get in relationships. I know you're going to talk about that in service, but you have to get in relationships where you feel as though you can trust the professional advice you're being given. I think that's critical right now, because of all the information that our clients are experiencing. If you're connected to a team that you're confident and knowing can help you, it'll be okay. Now, we may have to write a couple offers. That does not mean we're not good at what we do. There's timing. There's so many variables that the sellers control right now. And so I think it's very important that buyers understand that. Connect with the team that we always say, know, like, and in this case, feel like you can trust so that we can see you do this process. And you will get through the process.
Absolutely. So, so a couple of things here. So I'm a new buyer, right? Okay. I'm renting, right? Let's say my lease is ending at some point in June, July. So I got a little bit of time, but not too much time. I'm like, look, Stephanie, I've been renting for 5 years. It's been an okay experience. I'm ready to purchase. Now, me being ready to purchase, coinciding with this market, it is what it is. Like, I couldn't have foreseen that. But I come to you and I'm like, look, I want to buy, my budget is going to be, let's say, from $375 to $450. Okay. Because I'm a first time buyer. That's what I can afford. I've got, 3%, 5% to put down. My credit's decent. So what would you advise me within that range as a first time buyer coming out of renting into purchasing right now?
Well, the first step is once you contact me, you've been pre-approved or you think that's your range, we're going to work with a lender such as yourself. So that's the first step for my buyers who approach me. And most oftentimes they do. They come to us because I think we're more visible. We're out there as realtors. So the first thing I would do is connect my buyer with a lender such as yourself. We go through all the numbers. They're pre-approved, $375 to $450. Couple things I would ask them. Depends on their lifestyle, depends on the plans that they have. I service the entire DC metro area. DC, Maryland, and Virginia.
Okay.
If clients have flexibility,
Mhm.
they have more options, of
Right.
course. So that's something that I would ask out the gate. Are you open to your options across this area?
Okay.
If not, then we'll have either Virginia, Maryland. That's for the most part. My folks are Virginia, Maryland. And then we take it from there. But what I would share with them is, even if your max, what did we say, was 450?
Let's say 450.
We don't want to be at the top of your budget
Okay.
because you really don't have any room to
Right.
negotiate.
Okay.
So if people are paying attention to the news and to everything that they're hearing, sellers are receiving offers 10, 20, 30,000, in many instances right here in the DMV,
Mhm.
over asking price. So if you're looking at a townhome or a single family home in Maryland, it's 450 that you like, you're at the top. What can we do with that?
Right.
We don't have any options. So I always, even before this hectic market,
Mhm.
I always would share with my buyers, I'm the agent that's going to try to help you find what you're looking for below your budget,
Okay.
well below. Because we know when you pre-approve them, that is typically their max. They don't always have to spend that much.
Right.
So I'd say we need to be in the middle somewhere so that we can offer possibly a little bit more after I look at the comps. The other thing is we need to look at types of financing,
Okay.
right? We have to figure out the best way. We're coming up with a strategy.
Okay.
We're not just out here willy-nilly, guys. We actually do have a strategy. And some of the things that you can control are down payment money, money that you may have in reserves so that you don't necessarily have to ask the seller for concessions,
Right.
settlement dates. In many instances, sellers are looking for rent backs. So what does that mean? Maybe the seller is looking for a home. Maybe the seller's having a home built. They may need some time in their property after you settled on it. Are you going to be flexible? How much flexibility do you have as a buyer? I think
Okay.
that's very important right
Yes.
now.
Okay. No.
Because even though it's a seller's market, our buyers have to be willing to adjust
Mhm.
somewhat to get what you want.
Absolutely. So thank you. I'm gonna take my buyer's hat off. And you said the word flexibility.
Mhm.
And yesterday I did a Facebook Live, and I talked about the top 3 mistakes that home buyers are making right now.
Mhm.
And the first mistake that they're making is not setting the correct expectation. And to me, flexibility and expectation go hand in hand.
They do.
Right, because you have to expect to be flexible, in this market.
Exactly.
Right, because if you're rigid and you're like, I want what I want, when I want it, how I want it, you will get disappointed.
Exactly.
And then when people get disappointed, they get discouraged. And once they get discouraged, most likely they're going to stop their home search.
It's done.
It's over with, right? You're like, let me just sign this lease and renew for the next 12 months. And that's an issue because they're
Right.
not seeing the progress. And again, they haven't really set the proper expectation, up front. So you were talking about buyers offering money on top of what the list price is.
Mhm.
And there's a term that's been going around a lot, which is called an appraisal contingency.
Right.
And that's something on a contract. So can you explain to our viewers what an appraisal contingency is and like what does it do?
Okay, so the appraisal contingency is a part of your financing typically. So if you have an FHA loan, conventional loan, VA loan, you may still have a appraisal contingency, meaning that your lender will provide you financing if the home meets that amount. So let's say the amount we just said, $375.
Okay.
The home meant the appraisal value of $375 or more, right? In some instances. So if the appraisal value is more than $375, we don't necessarily need to let the sellers know, right? Because the house did appraise for that. If the appraisal value comes back less than $375, that may be an opportunity to negotiate with our sellers saying, hey, my lender who's giving me financing says that they won't finance this if it is less than, or they'll only do it up to a certain amount. So that difference has to be made up. In this market, I've seen the difference being made up between buyers and sellers.
Right.
And then sometimes the sellers do have the right to say they don't want to sell their home at that price point too, right? That's another opportunity where sellers can negotiate if they don't like where the appraisal came back at. I haven't seen that much, but it does happen where people, it just depends on what the seller's options are and what the buyer's options are. My most recent one, my seller wasn't happy. It wasn't this year, it was last fall. Appraisal came back $12,000 less than what she expected. But the buyer was willing to make up that difference.
Got it. Okay.
That's what the buyer wanted to do. They wanted that particular home. They made up the difference. They had an agreement. So they had the cash reserves though.
Got it. So it sounds like the appraisal contingency in a way protects the seller and the buyer. Is that correct?
I would definitely say it protects the buyer. Sellers, possibly, I guess if they want to look at it that way. Definitely for the buyers.
Okay.
Because sellers sometimes feel the house is worth more.
Absolutely.
So that's why they appeal that. So I wouldn't necessarily, it protects both.
Okay.
Definitely the buyer though, because actually it's the lender that owns the house. Like let's really break it down. And you're the lender. So the lender is always going to look out for their best interest. Right. So in this case, the appraisal is being done on the buyer's behalf.
Got it. So if I'm selling my house to you for $350, okay, but the appraisal comes in at $320, I'm angry as a seller.
Right.
Can I back out of the deal? Because I'm like, I don't like that appraisal value.
Oh yeah, you can. Definitely.
Right. Yep. And in hopes that the next buyer that comes along, the appraisal will come in higher.
And yes, and based on your lending background, it depends on what type of financing though. So sellers could get stuck, right? If it's an FHA or VA. Right. And you can explain that better than I can. So yes, it really depends on the type of financing, because that number may stick with that seller's property.
Right. Okay.
And our other clients, our clients, what were the Sneeds? Their appraisal came back less. That was an FHA, and she was a realtor, the seller. Worked out very well for them. The seller needed to move. She didn't even, she was upset. Sellers get upset. Yes, but she went forward with the deal, and it was a very happy ending for our buyer.
Absolutely. So let's continue on this topic. So what Stephanie was talking about is this. When you have an appraisal that comes in, remember, okay, this message is for buyers, but also for sellers. The bank is only going to lend you money based on how much the property is worth. That's it. It's called collateral. So again, if I'm selling my house to Stephanie for $350,000 and she's getting a loan, right, because she's the buyer, the bank's going to say, okay, this house has to be worth at least $350,000, right? If the appraisal comes back in, typically appraisals, normally they'll come back in right around that value. Why does that happen? When you have a home that's being sold, when you have realtors involved, you're going to have two different realtors on two different sides of the transaction. You have a listing agent who represents the seller, and you have a buyer's agent who represents the buyer. The listing agent should do their due diligence and do their research on what's called comps, which are comparable homes within a certain radius of the house that you're selling that has similar square footage, bedrooms, bathrooms, etc., that have sold, so that they know, okay, well, homes pretty much almost the same or very similar that have sold within, let's say, 4 to 6 months. That's going to help determine the value of the house. Is that pretty much accurate?
Pretty much accurate.
All right,
yes.
Great. So they're not just arbitrarily saying, okay, yeah, you can sell your house for $350. No, that's based on research. It's based on due diligence, right? So, but what's going on in this particular market is what I went on a rant about yesterday, and I'm not happy with, is that buyers, because it's like a piranha feeding frenzy, they are artificially inflating the market. Yeah, I'm putting my house on the market for $350, and it actually might be worth that in terms of the comparable homes.
Right.
But I've got 5 offers or 7 or 10 offers. Half of those offers are coming in at $380, $390, or whatever that number may be. And the buyer is saying, I don't care what it's worth. That difference, because the bank's not going to lend me money if the house is not worth it, I'm going to bring the extra cash to the table.
And only certain buyers can do that.
Right. Right.
So,
and then as a result, they're pushing out buyers who are just as credit worthy, who have good credit, who may have a 3 to 5%, maybe even a 10% down payment, but they don't have that extra discretionary cash, right, that these other people may have. Okay. It's called capitalism. Sorry. And that's what's going on right now. So as a realtor, as doing just different trainings, different seminars, things that you're learning from EXP, do you think that this trend is going to continue for a while? What have you observed, and what are your thoughts on that?
Well, just based on what I've been reading and seeing, I don't think it's going to slow down anytime soon. I would definitely say, look, I shouldn't say definitely, but just based on what I'm seeing, I'd say we'll probably go at least through the end of the year like this.
Wow.
Yeah, I think so.
You heard it.
I don't know if that's a good thing. I'm not saying it's necessarily a good thing because I feel for my buyers, right? Because it's tough. Like you just mentioned, there are credible people. They want to own homes.
Absolutely.
And they are not even getting in.
Right.
And it's unfortunate. I've been a buyer, even though I'm a realtor. Sometimes people forget, even though Brandon's a lender, we've been in this situation.
Absolutely.
So we understand the process and we're empathetic. And it's very unfortunate that our buyers are having to write multiple offers. And so what I try to explain to the buyers, like you said earlier, realistic expectations. And I firmly believe that in all my years of experience, which is 15, that my buyers, as well as our clients together, have ultimately gotten the homes that they love.
Right.
So it does work out. But there's a lot of issues behind the scene that I always like to look a little deeper than surface. You know, of course, there's fear, there's the frenzy, there's control. There's so much going on inside of us that makes us uncomfortable through this process. Forget what the market is saying, and let's just look at us personally and how we deal with situations that we don't like and that we don't have control over. And it's somebody else's fault. And then sometimes it's just a matter of how things are supposed to work together.
Right.
And I think if we try to look at things that way, it makes things a lot more palatable and easy for us to digest, right? Because I firmly believe you will get what you're supposed to, no matter what that is in life. We're discussing properties and homes right now, but I do believe it always has. I just haven't seen it any other way. So that's just been my experience. The house that you think you want, the house that you fell in love with, okay, we understand. We'll write a competitive offer. If you don't get it, guess what happens? I've seen it over and over again. And a week or two later, when you pick yourself back up, you find another house that you're in love with. How'd that happen, right? Week or two, you've already found another home. And so I think our buyers just need to be encouraged. This is a process, and most of us don't like the process. We just want to get to the finish line.
No, absolutely. And you're talking about, you brought up an idea which brings a word to mind with me, and it's perseverance.
There you go.
And I want people to really understand what Stephanie is saying. And my encouragement to you is to persevere. Now, on the flip side of that, I'm about to make a left turn and made me think of some lyrics. There's a group, right, back in the day called Mobb Deep, and they had a song called Shook Ones. And it says, there's a war going on outside, no man is safe from. You can run, but you can't hide from ever, from these streets that they done took. You're writing contracts down, scared to look. You're shook. Don't be shook.
Don't be shook.
Don't be shook. It's about resilience and perseverance.
Yes.
And here's the thing. I know we may jest and we may have fun and laugh and everything, but in all seriousness, we have to. Definitely what we both do is faith. It's really faith-based.
Oh my gosh. Let's go there.
Yeah, it's faith-based, but it's also competence-based.
Yeah.
We're professionals and we know what we're doing. And I think it's very important that when we do business, that we are empathetic and that we connect with people, right? Because what happens is if we show up shirt and tie and this and that and the other, sometimes there are certain people that you will connect with, but the vast majority, you will not connect with them. They don't feel that you can understand and be empathetic with where they're coming from, with what their situation is. And so here at Visionary Lending, you've heard me say it dozens of times, we are advocates, right? Straight up advocates, because we help people with their credit. We teach them about the process. We hang in there with them. No matter where you're purchasing, no matter what the purchase price is, no matter what your situation is. And so we try to meet people where they're at.
Yes.
And I think in particular with this particular market, we're meeting people where they're at. So what are you doing right now also to meet your clients where they're at and help them through the process?
What am I doing? Very similar to what you're doing. Education, right? Educating our clients, empowering them. I would say, I am definitely an empathetic person, but I'm also the one that's going to tell you the truth.
Right.
We don't sugarcoat, because what I don't want to do is set unrealistic expectations. I want my clients to say, you know what, Stephanie told me this would happen, or Stephanie shared with me, or Stephanie suggested this, so that they know, you said it. We are competent.
Right.
We know what we're doing. But for me, education is everything, right? That's our job, to make sure our clients have the information. Now, whether they take that or not is up to them, right? But they have the information to make informed decisions. And so that's what I find myself doing more than anything, is putting the information out there. And sometimes we get frustrated. Let's just keep it real. We get frustrated because we feel like it's falling on deaf ears.
Yes.
Right? And I don't know how many times I'm on social media, because I'm very present on social media, and I'm reading posts, and I see people, they're going to random people on Facebook or family members that may have had a transaction. They're not coming to the experts. We're not the only realtor lender partnership in town. There's millions of us across the country. Why are people not coming directly to us, right? That is frustrating, because we can save people a lot of stress, a lot of heartache and heartbreak as it relates to this process.
Absolutely.
So I was trying to encourage people, come to us. It's a no judgment zone. I've been through half the stuff or more than what some of our buyers are going through, but I made it, and they can too. So I just want to encourage people, talk to the professionals. That's why we're here. And it doesn't cost you to talk to a professional. I think that's so important, especially for our buyers that are credit challenged or feel like they have financial matters that are insurmountable. We know that nothing is really insurmountable, right? You know that. You've been doing this for years. It's not insurmountable. It just may be some, some delays, but not necessarily denial. And some of you know where I'm going with that. So at the end of the day, we're out here. We're doing these types of podcasts, putting the information out. Share this information, because we want our buyers in particular to be equipped, because I don't see the signs. You tell me what you see, Brandon. Are the signs, is it slowing down from what you see?
No, demand. Buyer demand has not slowed down. And some people are not some, I've gotten many calls from different people and different emails about the interest rates, right? Well, what about interest rates increasing and this and that? So let me just quickly explain a little bit about interest rates. Not too technical, but when interest rates go up, it really means that the cost for that particular interest rate may go up with regards to your closing fees. And so it kind of translates to, well, yeah, now rates are going up because people aren't willing to pay as much money for certain interest rates. Now, probably from last summer, like the May through like October timeframe, all the rates for conventional loans, FHA, VA, all those rates were like in the low to mid twos across the board. Okay, for 30-year fixed loans. Well, why? Okay, well, it's because it was stimulation of the economy, stimulation for the housing market. Why? Because we were suffering from COVID. Okay, so like we have to keep backtracking to make sure that you fully understand what we're talking about here. So that lasted for a while, but guess what? Once the announcements came out about vaccines, right? Once the numbers started to stabilize, once consumer confidence changed, once the unemployment numbers started to dip a little bit, right? Once you have those things happen and the economy starts to stabilize, interest rates go back up. Okay, so we're not going to have an economics class here, but now interest rates have been slowly creeping up. But guess what? They're still in the threes, high twos, low threes, which is still amazing. I think a lot of people have gotten spoiled. Already, because what happened last year, like, whoa, I can't get 2 point, like, well, be happy with this, right?
Move faster.
Exactly. So it's our job to explain that, help people to feel comfortable, to know, like you said, that they're getting a good deal,
right?
That they're being properly educated. So that's really what's going on with regards to interest rates.
Right. And the thing is, like you said, they're still getting a good deal. But some of it, like we do have to put some onus on the buyers.
Yes.
You all have been thinking about it. Some of you have been praying about it, talking about it for years that you want to own.
Yeah.
When are you going to take the first step? Right.
Absolutely.
That's important.
It is. And so it's funny because I was writing some notes the other day for a podcast I'm going to do. And I was like, that a lot of people who are Christians say, I'm claiming it. I'm going to claim it. While you're claiming it, Give me your W-2s, give me your pay stubs, give me your bank
That's
statements,
right.
and take care of your credit because I got to claim that, right?
Exactly.
But faith without deeds is dead. That's
I
what
was
the Bible
just getting
says.
ready to. I was
Right.
co-signing
So
that.
you can claim it and have faith.
You can claim it all you want, and God is like, do your work.
That's right. You have to
Like,
put the effort in,
do your work, and doing your work is, like Brandon said, getting your documents in, connecting with the realtor or lender, just putting the words out,
right?
Just saying that you believe and haven't actually taken any steps. I don't know if that's really belief or not, but that's a whole nother thing. At the end of the day, though, guys, we can't just keep putting it out in the atmosphere, because we see that too much within our community, and we know what we're talking about. We just put it out there, but we're not actually doing the work. And then you get upset, like Brandon just said, when you see the interest rates starting to go up, when you see the market is starting to change, but you sat and you just talked about it.
Right. No, absolutely.
Not talking. Like, we need to start taking action. If COVID didn't show us that last year, and we're still seeing, we need to start taking action on the things that we want. And home ownership is a priority.
It is. It is. And you mentioned just a minute or two ago about putting in the work. So let's kind of transition a little bit. You are a real estate coach. Like, you're coaching, you're building your team and EXP. And so you're helping these new agents to put in the work. So can you share with our audience a little bit about what you're doing? What got you into that particular field and what you're doing right now with that?
How did I get into coaching? Well, typically it's our own story.
Okay.
So when I started about 15 years ago, I was looking for a mentor, for a coach, because in any career, right? Athlete, 9 to 5, you want to be successful. You should want to model yourself after someone who's been successful.
Right.
Well, I wasn't fortunate enough to find a mentor at the time. And so I said, when I got to a place that I felt was successful, which is a consistent 6-figure earner, then I wanted to share. So I wanted to be the change. I think I said that. Be the change you want to see, right? So I said, that's what I wanted to do. I wanted to get back, give back, look back, reach back, whatever you want to call it, and bring other agents forward with me. Because what I found, and you and I have had many talks about this, we talked about doing the work. I think a lot of folks are attracted to this industry because it is lucrative. It can be sexy or appealing, whatever, vibes people get from it. But it's also work.
Absolutely.
And I think people forget about that, especially agents, because there's so much HGTV and all these great shows are amazing. And they show us how quickly deals are done, usually without too many issues. They show us amazing agents that look great in their $1,000 suits and, several $100,000 cars.
Right.
It's attainable if that's what you want, but there are steps and there's work to be done. And so I feel like, why not me? For a couple reasons. One, we went to a major conference, major coach across the country, and they're credible, right? They know the business. They've been doing this a long time. I feel also it's a whole nother generation of agents, of also how we run our business coming up. And I didn't see any women in that space necessarily, and a woman of color anyway. So I said, why not me? And so my goal is just to share with agents what I've done, not lead people on, not promise them something that I wasn't able to do, but help them to create at least 6 figures and beyond. Because believe it or not, the average income for agents is less than $50,000.
Absolutely. Yeah.
So when we see 6 figures and beyond, it's because just most agents aren't doing that.
Right. So let's talk about that a little bit. Okay. We talked about the work and the effort, right? Earlier in our discussion, you talked about strategy, right? So mathematically, like let's say if you take, you take the average of all the agents across this country, right? That's a mix of full-time realtors and I think you call dual career or part-time, right? Okay, fair enough. For someone to make, let's say $40,000 in a year as a realtor, right? That's and purchase price of a home, let's say $200,000 to $300,000, something very low.
Okay.
Right? It's probably about 5 deals. I'm guessing, just off the top of my head. Somewhere around there.
Yeah, give or take. You said about 5.
Okay, about 5 deals. So basically, a deal every other month or something like that. So it's not really that much. And then there's a lot of people who make a lot less than that. They just close just a couple deals per year. Right. So, what are you telling your new agents that are on your team? Like, what kind of expectations are you setting for them?
Well, I tell them, because some of them are dual career, and I'm very empathetic with that because I was as well. But I also share with them, you can create 6 figures dual career, right? It's how you feed your focus, though, right?
Okay,
and what do you focus on, right? So if you have your good government job, like many do in the DMV, of course, that's what's sustaining yourself and your family.
Sure.
But if you're committed to being a service professional and providing concierge level service to our clients, you're going to have to put in the work. So one of the first things that we do is decide what this is going to look like and how real estate will fit into the current lifestyle. The thing is, you have to make a decision to have it fit in, though. And you can't think just 1 or 2 hours a week is going to be enough time.
Right.
Especially as you're just getting started. So the first thing is fitting it into your week and making it work for you and your schedule. If you have a family, everybody's got to be on board. Everybody's got to be supportive. Everybody's got to be involved. And there's ways to do that. I have an agent right now. Her spouse is one of her number 1 cheerleaders. He's out there. He's videotaping her. He's referring clients to her. Like, there's ways to work your business with your family that will help you do that along with your dual career. So realistic expectations. We talked about that with our buyers. We have to talk about that with our agents and those that I am coaching. So that's number 1. Then we get an idea of how much they want to make. And then I kind of break it down for them because they're new, like you just did, on how many deals that would take. And then we have to look at how many people do they need to talk to, whether that's email, phone, text, how many touches, so to speak, do we have to do in order to get that person from a lead to a client, meaning they're signing an agreement, to settlement. So there's a couple steps in between there. And what does that time frame look like? So while you said maybe 5 deals to make 40,000, that's not bad. And I don't want anybody to feel that that's bad, especially if they have another job. That's an additional $40,000 coming into your household, right? But if you want to be a 6-figure earner and potentially leave that good government job, then we got to set you up, right? But starting now, I would say for someone their first year with a full-time job, 5 to 10 deals is not bad at all. And if you can go beyond that, that's great. But setting that date is one of the most important things anybody can do in real estate.
Right, which I think is critical.
We call it time blocking.
Time blocking. So, I used to do mortgages and everything part-time for several years. And so I looked at it as, okay, I am commuting an hour up and an hour down. And
2 hours.
Then, my phone is buzzing. Let me just turn it off. And, I'm there physically in the office for 8 hours, right? So, that's 10 hours. 10 hours. So I thought about this for months. I said, okay, even if I gave 8 or 9 hours a day, 4 or 5 days a week, could I be successful? Because for anyone who is working full time, that's good because you want to take care of yourself and your family.
Yes.
No doubt about it. There are individuals out there, there are people out there who, don't support that. They say, well, you need to have your own business. You need to do this. You need to do that. That's so untrue because this economy runs on all kinds of different people in different areas. Right. So I have nothing bad to say about that whatsoever. But if you are considering getting into real estate, mortgages, being a real estate professional, Stephanie, then you have to think about, okay, how am I going to feed my focus 8 hours a day in order to generate business that's going to leads that convert to closed business? The first thing, my first piece of advice would be make sure that you, number 1, replace your salary that you're making plus some, right? Plus some. You have to be able to get to a point working part-time where, okay, it's almost overwhelming because you don't want to leave and put yourself in a bad financial position. That's simply not wise. You need to have a plan and a strategy, as Stephanie, was saying. And listen, if that's something you're thinking about doing, make sure that you contact Steph at the Steph Sells the DMV, right?
Exactly. And you said plan, that's so important too, because when agents come in newly licensed, one of the things that I teach them, spend a lot of time on, is this is a business though.
Right.
It's not a side hustle. You can't treat people's hundreds of thousands of dollars or $1 million investments as a side hustle. Even if you are working at part-time, we never want to even think of this as a side hustle. And so I always explain to my clients, this is a business. And so we need to treat it as such. If you treat it as a business, you'll get the returns of a business. Right. And your mindset and your expectations are thinking that way. So then you'll see the returns as a business. You can leverage so many opportunities once you get your feet wet, once you realize what you're doing. There's so many ways to do real estate. We're talking typically residential, right? And even with my residential agents, right? You may not be able to commit to 8 hours a day, right? But you can leverage referrals.
Great point.
That's a great way to bring income into your household. So I just had a new agent in Florida on my meeting today. He's from the DMV. He lives in Florida. So I told him this morning in front of all his team partners up here, use your connections here, right? You don't have to work the deal to get 25 or 30% on a $10,000, $15,000 commission, right? Ding, ding, ding. That's several thousands of dollars for you making a referral. More agents need to learn how to work referrals, not just locally, across the country, and in some instances across the globe for those of us that have those types of relationships. That's another way to work your business in real estate. And then ultimately you grow a team. If you have another job, we've seen this, bring on an agent to assist when you get to that space. That's another way to reclaim your time while growing your business while still working your good job.
No, absolutely. That's gold right there. So listen, I don't agree with all this stuff that this guy says, but there is a book by Grant Cardone called Sell or Be Sold. Yes. And one of the things he talks about in that book is persuasion, right? And persuasion is so important. And then when you're able to persuade and back it up with credibility, right, then that's going to be critical. And the reason why I'm sharing this is because if you are thinking about getting into the real estate field, right, you have to be able to work your referrals, right? Work your sphere of influence. The people who you know other people, know other people. However, if you are afraid to open your mouth and actually ask for the referral, right? If you don't build up your competence and build up your confidence, then you may have a very healthy sphere of influence, your church, your friends, your community organizations, your neighborhood. Those things may already exist. They may be there, but you're not capitalizing on it. You're not taking advantage of it so that you can grow your potential business, right? So that's extremely important. One way that you can learn to do that is by hiring Stephanie as a coach.
Exactly. And Brandon, what you're saying, we say is foundational, especially for anyone in sales. But I always tell my new agents, there's pieces to this that they want to overlook. Those are the most important pieces. Your sphere of influence. That's everything when you're just getting started. Who do you know, right? That's who you start with.
Absolutely.
That's how you build up your confidence, as you said. That's those deals you take and build up your competence as well. So start with the folks that you know. People always overlook that. They just want to jump out. It's like, wait a minute, let's create our list. Let's do our little memory jogger. I think it's called FORD, the FORD method. Your family, F for family. O for occupation, people from your jobs, your colleagues. R for recreation. What are some of your passions and groups that you're involved in? And D is for like dreams, desires, right? So those are the types of folks you already know these people. They're already your database. They're already in your phone. Ask me how many contacts I have in my phone. I think it's like 2,000 something. So I need to get in touch with all those folks.
Yes, you do. Yeah. Wow. I think I'm like at a quarter of that. And I'm like, who are all these people? So listen, as we end off here, here's a few things that would summarize, okay, what Stephanie and I had discussed today. Okay. Number one, as real estate professionals overall, as financial professionals, we aim to be empathetic, which means we want to feel what you feel, right? We want to connect with you and kind of meet you where you're at.
Yep.
Number two, we want to educate, make sure that you are fully aware of the process, that you're guided through the process, that you are aware of what part of the expectations are, right? Okay. I would say the third thing is we want to encourage you, right? We want to encourage you. We want to push you along, spur you along, let you know that, listen, okay, you might not have gotten this offer, but let's try for the next one. Let's try for the next one.
And what did
Let's
we
try for the next
learn?
one. Right, exactly. And it's what's meant to be, as Stephanie said earlier, is meant to be. So that's that perseverance and that's that resilience. And I think one of the last things really that a lot of people miss is to actually execute, right? We may plan, we may pray, we may strategize, you may put it on paper, but if you don't execute, it never comes to life. There's never any fruition, that's there. Okay. So let's really think about those things together. Any final words for everyone?
Again, I would just encourage, whether you're a buyer, a new agent coming into this business, as Brandon said, it's time to execute. 2021, right? Time to execute. Homeownership or helping people become homeowners, right? One or the other or both in some instances. Let's just get it done. Let's stop talking. Let's get to work. There are people out here that need our services. Your family needs you to create that legacy.
Absolutely.
Let's go.
Absolutely. And how can people reach you?
Oh, how can you reach me? I'm on Facebook. My personal page is Stephanie Gordon. Business page, Steph Sales DMV. Instagram, Steph Sales DMV. LinkedIn, Steph Sales DMV. But we're growing beyond the DMV. So I'm so excited about that. But I'm all over social media. Get in touch. I love to connect with people and assist them on their journey.
Fantastic. Thank you so much, everyone, for watching this episode of the Visionary Experience. We're on Facebook Live. Check us out on YouTube, also Facebook, also Instagram at Visionary Lending. Listen, we love you guys. Please stay safe. Take care of yourself. Take care of your family. Anything that you want us to talk about, any type of particular topics, etc., please send me an email personally, brandon@visionarylending.net. Look forward to seeing you again soon. Take care. Are we done? Are we done? I hope we're done.